Greetings, colleagues and friends. I hope you are well today. I'm John Rurkowski. I'm joined by Mark Hogrefe with SunPoint Home Loans. Is that the correct? I think I've got that right, Mark? This time,
You got it right.
I think I've been pronouncing your name incorrectly. I'm sorry about that. Mark and I go way
That's okay.
back, and he is my go-to loan officer, mortgage broker. And this series of videos we're doing is to help educate buyers on the loan process. And we're going to talk about all things from A to Z, whether conventional loans, FHA, VA, etc., not owner finance, but for self-employed, things like that that are going to help you make the wisest decisions. So, Mark, today we're talking about conventional versus FHA. So, I think, correct me if I'm wrong, but um, is it true to say that anybody is eligible for an FHA loan?
Yes, pretty much. I think there's a biggest misconception out there that FHA is just for a first-time home buyer. I even heard people think FHA stands for first-time home something, but that's incorrect. It's
I never thought
it's
of
the
that.
Federal
Yeah.
Housing Administration. That's essentially what it is. So yeah, anybody can essentially get an FHA loan. I mean, FHA loans do have limits. Um, Locally in the Tampa Bay area, $541,000 is roughly the FHA loan limit. So it's not really for jumbo purchases, high-end purchase price homes, but really FHA loans are geared towards somebody that's looking for low down payment. So FHA loans only require 3.5% down payment. And first-time home buyers, non-first-time home buyers are eligible for those. I would say the difference between FHA and conventional, like why would somebody go over FHA compared to conventional? Sometimes it has to do with credit scores. If somebody has maybe average credit or below average credit, or even low credit, and they still want a low down payment, that's where FHA will really shine. It'll give them the best possible terms, the lowest interest rate, lowest monthly payment too as well. Sometimes, people will have credit issues, maybe a prior bankruptcy, who knows, maybe even a prior foreclosure on a property or a short sale. Those have longer waiting periods for conventional financing. They kind of put you in jail for 3 to 5 years if you're getting a conventional loan, if you had something like that in the past. FHA is a little bit more lenient on those programs. Okay, so um, now I would say where like FHA falls short might be with like condo financing. If somebody's looking at a condo, FHA has some restrictions that conventional loans don't have as much. So that's where the difference may come into play. But don't get me wrong, that if you're a first-time home buyer and you're looking for low down payment, there are low down payment options on the conventional side too as well. So again, it goes back to, what's the credit score? What's going to give them the lowest interest rate, lowest monthly payment? That's where the mortgage broker comes into play and looks at this scenario. Sometimes it's similar, and we'll give them both options and say, hey, these are two programs that you're eligible for. Payments are very similar. And then sometimes it'll come down to the details, like, why would I go with an FHA loan if it's similar? Well, uh, excuse me. Sometimes with FHA, or all times with FHA, there's mortgage insurance that's attached to the loan, and that mortgage insurance can be for the life of the loan. It could be for the over the 30-year term. So if somebody plans on keeping that mortgage for many years, they bought their forever home, they might not want that. They might want to have a conventional loan because with a conventional financing, the mortgage insurance can actually come off the loan once they reach a certain equity position in the house.
Right.
So that's one of the advantages for conventional financing. So it really
Right.
depends.
Yeah. I think if I had a buyer, first of all, not to paint all condos and villas, if it's a condo legal description,
Mhm.
if from my realtor friends out there, I wouldn't even consider taking a VA or FHA loan unless you know that the loan's gonna pass. Conventional for the most part will work, although we're going to talk about this as well down the road. Conventional
Yeah,
financing on even
condos can be a whole different animal, a whole
right,
different topic we can talk about for
right.
quite a bit. But you're right. I mean, for government financing, there's just added layers of hurdles that you have to do for government financing FHA and VA.
Right. And in the previous video, we talked about PITI, principal, interest, tax, and insurance. So going FHA, even though your interest rate it's probably lower, right, Mark? FHA and VA are a little bit less than conventional right now because of the mortgage insurance involved, there. You never know. That's why you need to shop. You need to, if you're a FHA candidate, you may not have a choice of going anywhere but FHA. But a conventional buyer may be better off going FHA and putting more money down. So you got to work the numbers because PITI is what it's all about, right?
Mhm.
Let's say somebody applied with you, and at first they were doing FHA, and then rates dropped or whatever. Can they switch to a conventional if they want to during the process?
For sure, they can. Typically, going from FHA to conventional is no problem. If they're already under contract to buy the house, there's really no uh, alert that we have to provide to the buyer's agents, to the everybody in the party. Now, when you go from conventional to FHA, that's a different story. As you're probably aware, most realtors understand this too. There's an addendum to the contract that the seller has to sign off on. It basically says that the buyer is getting FHA financing. And what does that really mean? Well, it provides them with added protection as a buyer. It basically says in layman's terms that if the property doesn't appraise, then the buyer's not obligated to purchase the house. So it's kind of like a built-in appraisal contingency with FHA financing. So again, if you're going from conventional to FHA, all parties will have to be aware of that and sign an addendum to the contract. But going from FHA to conventional, there's no problems with that. And sometimes that happens. Sometimes clients will reevaluate it and say, you know what, this might be my forever home, and I might, want to take this conventional loan, and the payments are similar, so I'll go with that.
Right. Mark makes a great point there. So agents, you realize when we're writing up an offer with a FHA buyer or VA buyer, we need to use that FHA VA addendum. And the seller obviously has to agree to those. And maybe they don't want to. And why would they? Why wouldn't they? Well, the condition of the property, for example, because FHA and VA has stricter guidelines when it comes to inspections. But as Mark mentioned, it's easier to go from FHA to conventional than the other way around. With the conventional loan, we don't have that addendum requiring appraisal the property to appraise at the purchase price unless we write it in there. So conventional and FHA, that's why I need to speak to a local loan officer who can best guide you to make the best, wisest decision for your long-term, mortgage. Mortgages aren't short term; they're long term, and but luckily they are because they're stretching those payments out and making it affordable for us to buy a home. So, Mark, any last comments about FHA or versus conventional?
Well, the government's been talking about trying to ease up some guidelines on FHA financing. There's one particular guideline when it comes to like a flip. So if a property has been purchased by, let's say, an investor, and they're going to turn around and sell that property, FHA guidelines have some restrictions on that. The seller has to own the property for 90 days. So the government's looking at things like that and saying, hey, this seems like a silly guideline. Maybe we'll get rid of this and try to have more buyers get into the buying pool. But that's something that is currently in place right now. So with FHA loans, flips are really not an option. You see a lot of iBuyers, which is those companies like Open Door, and there's many of them. They'll buy a property, turn around and sell it, and if they're doing that within 90 days, they'll put that it's not FHA eligible. So that's one thing that FHA buyers should be understanding. And they'll look at property and say, hey, why is this property not eligible for FHA financing? It could be a flip. So that's something that is currently in place. So, and something agents should definitely know too as well.
Yeah. Okay. So regarding that, can you write an offer up on a property within 90 days, or you can't? You got to wait for 90 days to write the offer up.
You have to wait. So the guidelines state it goes from when the seller acquired the property to when the actual contract was executed. So that's the 90-day period. So yeah, I get that question all the time. Can we just write the contract and then you guys just sit on your hands till we reach that 90 days? No, there's really no
No.
wiggle room around that,
Yeah.
So
Yeah.
I'm not sure why that guideline's in place, but it is. So that's something that FHA buyers should be aware of.
Yeah, well, hopefully they'll lessen that restriction. I mean, we need to create more opportunities for buyers, not less, especially the FHA and first time buyer. They're the ones who are really struggling, at least, and especially in our area here, because of the price points in tax and insurance. So, well,
Sure.
Mark, that
Yeah.
was short and sweet and educational. So, I think the bottom line, friends out there, is you need to just um, get your documents in order completely. So you can give them to Mark. Let him help you make the decision on whether you can go conventional, and if not, then FHA. And our next episode, Mark, when we visit again, we're gonna talk strictly VA. So
Great.
that that'll be the next segment. So, friends, thank you for joining me today, and Mark. And guys, if
Thank
you
you.
are interested in learning more about the process of buying a home, surround yourself with the right people. Align with a great realtor who's aligned with a great lender. And that's what we're here for. We're here to help you make wise real estate decisions because that's what's most important. So for Mark, I'm John. We'll see you on the next episode. Thanks for joining
Thank
us.
you.